Hello everyone, thanks for checking in. In this video, we're going to go over a very popular name, and that is Sofi Technologies. Many of you are familiar with Sofi because of the Sofi Stadium, but in this case, we're going to be talking about the company and the stock. We're going to talk about the fundamentals, and then we're going to go over some levels. That way you guys can kind of have an idea of where it can possibly turn around in the near future. So let's go ahead and pull up its financials. Let's go ahead and take a look at their recent earnings. The company grew revenue at 32% to 1.34 billion. I believe that is their best quarter so far. They've been ramping up for as long as we can look back. I always look at 3 to 5 years of history. SoFi is a young company, so every year matters, but the later years, of course, matter than the previous years. Later years, what I like here is that they're ramping up the growth rate. So not only did they ramp up the revenue to a record number, but the rate of growth is also moving higher from 28 to 32%. They did take a big hit on their net income compared to the same period last year, which could be part of the reason SoFi started selling off. The company is trading at a premium of 51, which is a price to earnings of 51 means that the market expects a lot from it. And if they don't deliver on that expectation, then they easily correct. So let's pull up SoFi's chart on Thinkorswim before we go to TradingView and give exact levels, because I want to point out the fact that the stock had been selling off into these earnings almost like markets were expecting them to take a pretty big hit on net income. But it doesn't necessarily take them out of the game, because the price of the stock is not exactly what matters. What matters is the market cap and what it's trading at in terms of premium. SoFi isn't trading at too expensive a market cap, at least not anymore. The company was trading about 50% higher not too long ago, so it was closer to the 50 billion mark than it is the 25 billion mark, or right in the middle. And its price to earnings ratio was also much more expensive when it was trading 50% higher. So now it's back in a more attractive range. In fact, it's trading below all of its moving averages, and that's what I wanted to show you on Thinkorswim. It's trading below the 200-day moving average in this case, which is this long gray line. You can see it's the smoothest moving average, and that's because that takes the price over the last 200 days of SoFi, every day that it closed at what price, and it divides it by 200. It adds those prices, divides it by 200, and it gives you the average trading price over the last 200 days. So over the last 200 days, investors have been willing to pay $23 a share for SoFi. And right now, for the first time since April of last year, they're not willing to pay that average. They're willing to pay less. But usually they tell you that if you like a company and you believe in the stock, you want to buy at the 200-day moving average if it gives you that opportunity. I'm going to give you an example with NVIDIA back in April, where you can see that the stock dipped below the 200-day moving average, and it continued below that for a while before it recovered back. So kind of think of the market as like a pulsating action. It's not necessarily a smooth, exact reversal point, but these lines are a very simple way to kind of understand where the overall market is feeling right now, because if the stock is trading below them, that means the market is feeling more bearish than bullish, but buyers will actively try to get into good stocks at or below these lines so they can get deals. So is SoFi at a deal right now? What's probably going to happen in the coming future for SoFi is, because the company is still trading at a premium of 51x, it may not recover right away. What we could see is future earnings, which won't be until May since they just reported earnings. Future earnings will slowly make the valuation more attractive. Think of a business up the street from you, like a gas station, for example. The gas station, it has a very high premium right now because Chevron is really a very popular name. But then you know that there's going to be higher demand in the later parts of the year. You may not see much return from that gas station until the later parts of the year. and that's when it will become more of an attractive investment. And that's kind of what's happening with SoFi here. People do expect them to grow their earnings, but it's not going to happen till later on. You can see that they're ramping up in the future. Revenue is expected to double in the coming years, which is really impressive. And so with that expectation in mind, people may still be willing to pay the premium, but they may not be willing to pay that much more of a premium. So we may see it consolidate down here for a while until SoFi starts posting better earnings, stronger earnings, as Nvidia started doing here, and then continued its rally higher. And in terms of the rest of their financial statements, let's go back to SoFi statements, balance sheet. Balance sheet looks strong. They have about $10 billion in positive equity. They do have a lot of liabilities for a fintech company, but nonetheless, they're keeping a healthy balance sheet. And then free cash flow, pretty weak in a sense, sitting at around 10 million. That is something that they want to work on. Remember, they're a bank. They're a digital bank, and I mean they're more than a bank, but it is important for them to keep free cash flow. For any company that's that's you're looking long term, especially one that's not supposed to have so much overhead, you want them to produce free cash flow because that means they're an efficient business. SoFi is also tied to interest rates. It's tied to the rest of the fintech world. So you want to kind of keep an eye on the rest of the industry in order to gauge how the market is feeling overall. Now let's talk levels, okay? The moving averages would be the most obvious way to use resistance and supports. If the stock is trading below them, those are resistance. If it's above them, those are supports. And these are the 10, 20, 50, 100, and 200-day moving averages. But other support and resistance points are going to include the obvious here. This is the biggest breakout, as you can see, that dates back to June. This dates to January to June. So January, the stock got rejected at 1850 and it moved 50% lower. Does that look familiar? And then recovered back and broke out and continued rallying as the company scaled up earnings and as investors were willing to pay for higher risk stocks. So remember, SoFi is a higher beta stock because it is a young, high growth company. It's going to move faster than the index when the index rallies as a whole. And what we do know is that the market rallied between April and November. And then it's also going to sell off faster than the index when the index or market corrects as a whole. So if you are an investor in SoFi, you have to prepare for that wild ride. Or if you're an investor in any high growth stock at all, it's just the way it works because these young companies, they don't have a lot of free cash flow. They don't have a lot of revenue for investors to be willing to hold them through times of uncertainty as much as they might hold something like a Costco or a Coca-Cola or something. So SoFi is coming up on a very critical support between 18 and 19. We would like to see it hold, but even if it doesn't hold, it's not the end of the world, remember, because as long as the company's earnings continue improving, the sentiment will likely come back. So 18 to 19 is going to be your main support coming up. If it doesn't hold, it'll likely come down to around 14 to 15. Resistance in the way is going to be 23.43. That is going to be right above the 200-day moving average. So what you'll often find is that your resistance points, whether it's the moving average or a trend line like this, they will often match up. They'll be right around each other. It's just the way it works. 18, and then the resistance is 23.50 here. Perfect. Okay, so the stock is going to need to break above 23.50 to regain any confidence. Otherwise, I think it's going to just kind of consolidate sideways. There's no telling how quickly it'll make either move. It just depends on the overall industry, overall market, and if there's any news that's specific to SoFi. Before I let you go, one more thing about SoFi. You can see here that the stock has a 9.2% short float. So that means that there are about 10% of the shares that are available to the market being bet against. So they're betting against the company. This is not abnormal for a high growth company. Some companies have much higher short floats. SoFi has 10%, which means that If there is really, really good news for this company, we may see a small short squeeze as those short sellers try to close out their positions. Anyways, I hope you guys enjoyed this video and I hope it was helpful. Thanks for checking in.